Can you trade ETFs after hours? The realm of after-hours trading has long been shrouded in mystique, a realm where investors can buy and sell securities outside of the traditional trading hours. While this practice offers the allure of potential gains, it also presents significant risks that must be carefully considered. Two startling facts underscore the unique nature of this market. Firstly, studies have shown that after-hours price movements often reverse during regular trading hours, suggesting that these price fluctuations may be driven by factors other than fundamental shifts in underlying assets. Secondly, the volume of trades executed during after-hours sessions is significantly lower than during regular trading hours, leading to potential liquidity issues and increased price volatility. The ability to trade ETFs after hours can be advantageous for certain investors. For instance, those who work during regular trading hours may find it convenient to place orders after the market closes. Additionally, investors who wish to react quickly to breaking news or significant events outside of regular trading hours may also benefit from this practice. However, it is essential to recognize that after-hours trading is not without its drawbacks. The reduced liquidity in this market can lead to wider bid-ask spreads, meaning that investors may pay higher prices for securities or receive lower prices when selling. Moreover, the increased volatility during after-hours trading can amplify both gains and losses, making it crucial to manage risk effectively. One of the key factors to consider when trading ETFs after hours is the nature of the underlying assets. ETFs that track highly liquid underlying securities, such as large-cap stocks or popular indices, are generally less likely to experience significant price fluctuations or liquidity issues during after-hours trading. Conversely, ETFs that track less liquid assets, such as small-cap stocks or commodities, may be more susceptible to price volatility and liquidity concerns. Furthermore, the choice of brokerage firm can play a significant role in after-hours trading. Some brokerages offer more advanced trading tools and features, such as real-time quotes and charting capabilities, which can be beneficial for investors who actively monitor market conditions. Additionally, the fees charged by brokerages for after-hours trades may vary, so it is important to compare different options to find the most cost-effective solution. In conclusion, the ability to trade ETFs after hours presents both opportunities and risks for investors. While it can offer convenience and potential gains, it is essential to be aware of the challenges associated with this market, such as reduced liquidity, increased volatility, and the potential for price reversals.